What's up traders, and welcome back to another insightful video on my YouTube channel. So I'm going to be covering something very interesting today. And you know what, earlier I planned on making breakdowns of possible trades from last week, but I changed my mind, right? And the reason is because I had a lot of requests from my followers asking me to make a breakdown of certain trades that I took yesterday, right? These trades that you see on the screen, right? And these trades are out of the normal smart money concept strategy that we all know, right? They were advanced stuff. So I felt like, you know what, let me share this with you guys so that you guys will get the insight, the thought process, whatever I was looking at you know, before I took all these trades. Probably you can also get some few lessons and add to your trading arsenal, right? So before we jump into the charts, if you are not subscribed to the channel, please do well to hit the subscribe button, turn on post notifications, and please leave a comment in the comment section. Okay, so with that being said, let's jump straight onto the chart and let's see what we have for today. Okay guys, so welcome back to the chat. Pardon me for my voice. I'm not feeling so well, so yeah, pardon me for that. So I'm going to be covering these trades like I said in the introduction, right? And what I'm going to do is that before I delve into the analysis, I want you to take notes of all these confluences that I use, right? So I'm going to mention them and you make sure that you write them down and you go and read more about it, or probably go and backtest more about it. So the confluences that I used in taking these trades, first one is market structure, right? Take note of that, market structure. The second one has to do with Asian high and low, right? And the second one, the third one is the mid Asian range, right? That is equilibrium of the whole Asian range, right? If you are finding difficulty understanding that, what I'm trying to say is that, you know, when you take the whole Asian range like this and you use your fibs, right, from the low to the high, the 50% of the Asian range, right? Great. So that's the third confluence. The fourth confluence that I applied was the Frankfurt open highs, right? So Frankfurt highs and lows, okay? And the fifth one was liquidity, right? Internal liquidity. Okay, so that is it. So take note of all these things that I've said and make sure you go and then back test it, like try to find out more about these things that I've mentioned. So I'll be using the bar replay tool, and so I'm going to rewind price back to Monday 20th of June. So I'm going to start from here, right? And show you guys what I saw, right, and the things that I was looking at to help me take all these wonderful trades like you just saw on the screen. Okay, so like I said in my introduction, these are advanced smart money concepts, right? And so you need to backtest them. You need to find a lot more about them. You need to understand them before you try to incorporate them into your trading. Okay, so if you watch my breakdown video from last week Sunday, you're going to realize that I was saying that this level in here was a refined supply zone, right? From the H1, I refined from the H1 to the 5 minutes, and I was saying that I was looking at price to come into this level and then I can take sales to the downside, right? Because H1 was bearish. And I went on to say that irrespective of the fact that I'm looking for sales to the downside, right, we could also have price breaking this H1 last point of supply, right? Then we can have price moving to the upside. Okay, so in as much as I was looking for sales, I was still aware that I need to trade what price tells me and not what I am thinking. Okay, so when the market opened, this is what I saw. So let me play price forward. Great. So immediately market open, right? This was what I was looking at. I saw that this last point of H1 supply was broken. Okay, so H1 had turned bullish. H1 has broken structure to the upside, right? And so I began to look for confluences that will help me to take my trades to the upside to look for just buys, right? So quickly, let us start applying all the confluences that I mentioned earlier. So I'm going to go back to my intraday time frame, right, and show you something. So basically, this was the last point of supply on the 15-minute that got taken out right here, okay, and we can see that this was the beautiful candle that caused that break of structure on the 15-minute time frame, right? Apart from that, if I should take my Fibonacci and spread from the low to the high, I'm going to see that this candle lies right within the 50% of the Asian range, right? So that becomes a very good candle for me to look as my Asian range, right? My mid-Asian range, okay? So I was looking at this candle right in here for at least price to get into this level, then we can get some buys to the upside, right? So yeah, so that's the first thing that I did. And quickly I went into my 5-minute time frame to see if I could get some trades to the upside, because on the 5-minute we can see price making what, higher highs and higher lows, right? Higher highs and higher lows, okay? And we can see how price has come into this level, okay? So let's step into the 1-minute time frame and let's see what price gave us on the 1-minute time frame. So on the 1-minute time frame, you're going to see something very interesting. So first off, let me mark this point of interest right here, and that was the first trap that was created. That was the first trap. So I'm going to play price forward and you're going to see something great. So in here, you're going to see that when price came into this level right in here, right, it gave us this beautiful confirmation. You can see how price made this minor break of structure in here, okay? So smart money traders will be convinced to start looking for buys in here, right, to the upside. But in actual sense, this is a trap, okay? It was a trap because, you know, I was paying attention to something here. If you look in here, you're going to see that price made this fractal distribution, right? Fractal price movement, okay? Let me put it that way. So personally, I was looking at the first position from here, okay? I was looking to sell from here, okay? Because first off, we've had the Asian high taken, right? And I knew that, okay, there could be an opportunity where price will come into this level, then I can look for sales, right? If you look at the screenshot that I'm going to put on the left side of the screen, you're going to realize that I had some sell limits up here, right? It is because I knew I was supposed to get an entry from here, right? So if you've watched my video on the entry criteria, you will know what this kind of entry is. This is a follow-through entry technique, right? So that was the first trade that I was looking at, okay? But like I said, this was a smart money trap, right? Why was it a smart money trap? So first off, let me clear all these drawings and let me show you something. Great. So like I said, smart money traders, after this minor break of structure, will be looking to take the buys to the upside, right? But in actual sense, it was a trap because, you know, when price came in here for the first time, if you look at this particular candle right here, it will tell you that price was trying to make a push to the upside, okay? But it failed. It couldn't make that push to the upside. So it tells me that there is enough bearish power in here to make price push to the downside. So quickly, instead of taking the buys, right, I rather marked this candle right in here, and you know, I was just waiting to see how price reacts of that candle, right? So let's say smart money traders had set their limit. Let's see what happens. So you see, smart money traders get tagged into the trade and they're happy, okay? So continue to play price forward. We've had follow through break of structure, right? They have confirmed. Some may even add more positions after this break of structure, but it is a trap, okay? So let's see what happens. And then boom, it takes them out on a stop loss, right? And they'll be wondering, but how did I get my entry? So after this break of structure, it just gives me another confirmation that, oh, my sales were right? So you can see price making higher highs and higher lows in here, and this level was actually supposed to make a push to the upside, but I couldn't. and it rather led to a break of structure. So again, it tells me that there is enough bearish power in here, confirming that bearish power that I was talking from here, right? I was talking about from here, right, to push price to the downside. Okay, so quickly I just set my limit because I've had whatever I want to see. I've seen whatever I want to see, so I just set my limit for sales, right? So I set my limit, and my stop loss was, I think, 3 pips or something. Yeah, 3 pips, super clean, right? And my target were like 6R, right? 6R, but I took majority of my volume at 5R. Okay, so this was it, and let's play price forward. So I get tagged into the trade, right? And fast forward, you see what price does, and just hits my take profit, right? Super clean, right? So that was the first trade. Okay, now the second trade, another trap. So back to the 5-minute time frame. So on the 5-minute time frame, right, you can see price making lower highs, lower lows, lower highs, lower lows, right? And believe me, smart money traders will again mark this level in here as supply to look for sales when price taps into this level to the downside. They are not wrong, right? But you need to have so many things that you have to be watching, right? So in my screenshot, you're going to see that my target exceeded this particular high, right? And I'm going to explain that in a minute. So when I come to the 1-minute time frame, let's see what price provided the smart money traders to take. Okay, so let me play price forward once more. Nice. So what do you see? You see price making higher highs, higher lows, right? Higher highs, higher lows, and we've had this beautiful confirmation. Okay, and so yeah, again, smart money traders will set their limits right in here, have their stop loss right in here for like, let's say, 4 pips. Why? Because we've had, first of all, a break of structure right in here. Secondly, price has tapped into our supply, right? Third, this level in here, we can see how it tried to make a push and it failed, right? And rather led to a break of structure of this point, right? And so smart money traders have all the confluences that they need to take the sales to the downside, but in actual sense it is a trap. Okay, so the first thing, or the first confluence that make this a trap, is the fact that, you know, this point of interest that you are looking for your sales, if you look right in here, you're going to see relatively equal highs. That is liquidity, right? And you don't stand in the way of price, right? Because price will always head to where there is liquidity. So these are relatively equal highs which price will take. Okay, apart from that, I was taking this buys from here as a counter trend trade, even though I didn't take this buy, but this is how I would have taken it, right? Once I see this equal highs over here, I mean, I would have doubted. Okay, and another confluence apart from this equal highs you see is, you know, like I said when I started this video, I was mentioning some confluences that I used. If I put my crosshair over here, right, and you look at the time, you're going to realize that it is around 6:16, 6:15. That was the first high that was created before landing, right? So that it was the first high in the Frankfurt session, right? And it is also liquidity because H1 is bullish, so there's a higher tendency that price will take out this high. Okay, so yeah, let me just set my limit for the buys and let's see what happens if the smart money sells moves, or if my buys gets triggered, right, and hits TP. Okay, so when smart money traders are looking to sell here, I am considering this as one swing. So this is the first swing and this is the second swing. Everything in here is liquidity. Okay, and so I'm gonna have this as my point of interest to set my limit like this. Okay, so this would be demand for me, and moreover, this was also the first low that was created in London and it had been taken out. Okay, so that's inducement for me, right? So liquidity taken out from here, liquidity built up here. So it means that price has a higher tendency to take out this liquidity. We have one liquidity here, we have a second liquidity up here as a Frankfurt open highs, right? So all these confluences added up to give you that confidence to take trades to the upside, right? So I have my limit set in here for the buys, and my stop loss will be right below this for 5 pips, and I'll be targeting like 5R, right? And let me play price forward and let's see what happens. Okay, so you can see smart money traders get tagged in on the sales. They are happy, it gives them that reaction. My buys also get tagged in, but let's see what happens. And then boom, it hits stop loss of smart money traders, and I am still in a trade for the buys. This liquidity has been taken, right? Let me continue to play price forward and let's see. Okay, so fast, it just moved on to do what? To take out, to hit my take profit, right? So that's the second buy. Okay, so it is not enough just knowing how to trade smart money concept, but you have to also understand where you become liquidity for the market, right? You have to learn all those stuff. Great, so let me move on to another trap again for smart money traders. So guess what? So before this high was created, okay, let me just use the bar replay tool again. So before this from fake high gets taken out, guess what smart money traders will be thinking? They will be thinking that, oh, this was the low that made the high, right? And so we've had this break or structure right in here, okay? And so yeah, BOS to the downside, and they'll gladly be looking for price to come in here to take sales to the downside, okay? But like I said, this is liquidity for price to take because it was the first high that was created in Frankfurt, and also H1 is bullish. Okay, so there's a higher tendency that price will take this out. Okay, so playing price forward, you already saw it. So immediately this high gets taken out, I know that now my trades are set, my setup is ready. Okay, so I can start looking for sales. Okay, meanwhile smart money traders have been what? Have been taken out already, because especially those who don't wait for confirmations, right? You had your limit set in here waiting for price to tag you in. It just takes you out, and after that I know that this was an inducement. This was liquidity built up, it has been taken, and I pay attention to details very well. Okay, so this was my second sell that came in. So look at this real quick. We can see price making higher highs, higher lows, right? This little moves, higher highs and higher lows, right? Higher highs and higher lows. So immediately I see this level taking out, I just know that, oh, it has given me that confirmation after this liquidity. You know, they try to make this thing not so obvious so that you miss out on trades. So they frustrate you, and I mean you begin to miss out on trades because you've taken a loss here, you've taken a loss here, you've taken another loss here. You'll be confused, right? But I understand whatever is happening over here, right? So quickly I just set my limit, and I consider I factor in the imbalance over here. So I'm gonna have my limit set in here like this, my stop loss right in here. I think it was 4 pips, yeah, and my target was to this low, right? And you're going to see another trap that they are going to set for smart money traders. So that particular Monday, it was a whole lot of traps being built for smart money traders, right? So I'm going to play price forward again, and you're going to see something nice again. Let's see. So I get tagged into the trade, right? And price begins to move. Okay, now look at this here. Imagine that you're a smart money trader. When you see this point that I have marked as liquidity being taken, what are you going to say? You're going to say it is a break or structure to the upside, right? So let me think the smart money way, and let's consider this as a break or structure to the upside. This is another trap. Okay, so this is a break or structure to the upside for the normal smart money trader or the traditional smart money trader, and so they are going to mark this level in here as, again, demand. And you know what smart money traders are waiting for? They're waiting for price to get into the zone, and then they can take the buys to the upside, right? Let's see what happens. So I am already in this sell, right? And I'm targeting this low. Let's see what happens. I'm playing price forward. So we can see price making lower highs, lower lows, lower highs, lower lows. Another internal trap is going to line up right in here, and I'm going to explain that also. Great. So this is another trap also, right? So when you come onto the 5 minute, you're going to see something nice, also a trap. So smart money traders on the 5 minute time frame will call this a break of structure. Okay, meanwhile this is just liquidity sweep. This is inducement, right? It's very beautiful when you begin to understand all these things. So smart money traders will be calling this a break of structure, and they'll be looking forward to take this buys, right, to the upside. Okay, something like this to the upside, or probably let me go to the lower time frames, and you're going to see that you know imbalance over here. We have a block left in here, and so yeah, entry on the mitigation, stop loss right below the structural point, and they'll be looking forward to take the buys to the upside. But in actual sense, this is a trap, right? So I know that instead of this being a break of structure, it is just an inducement. Okay, so what I'm going to do is that I am going to wait for price to break this low, and I am going to set my limit on this point of interest right in here for sells to the downside. So again, let me play price forward and let's see what price does. So smart money traders are in the trade, right? And price moves in their direction for a while. They are happy because their trades are going to hit TP again, and then it comes back and takes them out on the stop loss. Even if you had your stop loss here, it will still take you out, right? So see that. So it takes them out, right? But I understand that this is not a break of structure. This is a fake break of structure, and this becomes inducement. And so I'm looking forward to take sales right from here. Okay, so this becomes my supply zone, and I even have more confluences. I have another liquidity built up in here. This is inducement again to push price like this. This will instigate price to move to the downside, right? It needs more power to move to the downside. Apart from that, we can see imbalance over here, right? Between this level and this wick, there is an imbalance, price inefficiency. So it gives me more confluence to take this trade to the downside, right? With, let's say, 4 pips stop loss, and I'll take TP at this particular low in here. Remember, there is also another trap in here waiting for smart money traders. Okay, and you're going to see how these traps are always presenting smart money traders with what right confluences to take the wrong trades, right? So I'm going to play price forward again. So price tags me in the third sell, and this was the sell that I let go, right? So I took this sell, I let this sell go because it was against my break-even protocols, right? I had not broken even yet on this trade, and so there was no need to add another position, right? Else to be like a double risk. So I need to respect my plan. So I'm going to play price forward again, and let's see what price does. So beautifully it taps into this fake demand zone, right? Let's see if it gives us any confirmation. And yeah, it gives that confirmation, right? Look at this. It taps into this level. We have price make that 1 2 3 move. There's a minor break of structure in here. Smart money traders are happy. We are in London, right? London session. We've had this candle with imbalance right in here. Oh, that's a very good trade for smart money traders. We have our stop loss here, reasonably for 3 pips. We are looking forward to take it to this high, right, for 9.5, right? So let's see what price does. Price taps into it, gives us a beautiful reaction. Oh, this trade is going to go up, and let's see, boom, it hits your stop loss, right? So when price is hitting your stop loss, it is hitting my take profit. Okay, so all these are traps, right? So this hits my take profit, okay, nicely, beautifully, right? Hitting TP nicely. And now you are frustrated. Now this is where the traditional setup the traditional smart money setup is presented. But after taking all these losses, like 4 or 5 losses, I don't think you still be in the market to still pick trades unless you have the heart, or unless you are giving up. You are like, oh, I have taken all these losses, my account is almost blown, let me just take this one. Okay, so this is where the market presents you with the traditional smart money setup. So you're gonna have your supply zone in here, because we've had a break of structure to the downside right in here, right? This is a real one, right? So we've had a break of structure to the downside, and we mark your supply zone nicely, maybe refine from the 5 minutes, right? So let me go to the 5 minute and let's see. So yeah, so refine from the 5 minutes, you're gonna have that as a supply zone. Back to the 1 minute, and what you're going to do is that you're going to wait for price to come into this level, right? Then we can sell to the downside. Okay, meanwhile I am only waiting for price to come into this level. So I've taken this sell, I've taken this sell, I've taken this sell, and use the normal smart money trader or traditional smart money trader has hit like 4 or 5 losses. You might be frustrated, but this is a very good sell. So let's play price forward and let's see how price gives us that reaction or that opportunity to take the sell. Yeah, so beautifully price comes into the supply zone. This is an easy one. This is a very beautiful one, right? So price comes into this level in here, right? And all what you're waiting for is a confirmation. Okay, so yeah, we had that beautiful confirmation. So break of structure to the upside and a break of structure to the downside. So this is the BOS model, right? And as beautiful as you think it is, you might just set your limit right in here. So probably you might ignore maybe this candle over here, but what I do is that if I see 2 points of interest, I either split risk, right? I'm either going to split risk, or I'm going to take the higher one for further confluences. And this one, with this kind of trade, I took the higher one because first of all I had this imbalance in here, right? We can see that this level didn't have any imbalance in here, but I had more imbalances to the upside here, which told me that price had a tendency to move to the upside, right? So I factored in my imbalance, right? So wick was my entry and my stop loss was right in here for another 4 pips. And where was my target? My target was to this low. And if you see the screenshot, you will see that I even took profits past this low, but I took majority of my volumes at this low, right? And the reason why I held it down was the fact that I just understood that price needed to get into this mid-Asian range, okay, to look for buys. Okay, so yeah, let's play price forward again and let's see what price does. So see what price does. It comes in here. If you took if you put your limit in here, you see that it came in, gave you the push, beautiful push, you were happy. It comes back and it takes you out before triggering this real entry. So you see traps everywhere. So let's see. So and then I get triggered, right? My trade gets triggered, right? And you're gonna see how it is going to tank. It will just tank to the downside like that. So you can see, so fast forward, price hits my take profit, right? So these are things that you really need to understand. You need to make time and back test, right? So I've shared this with you guys, so kindly make time, try to understand whatever is happening on the market. Do not just say that you understand smart money concept and so you can just treat it just like that. No, if you feel like you don't understand what is going on the market, stay away. Okay, there will always be opportunities on the market. Okay, so this is where I'm going to end today's video. If you found value in today's video, kindly give this video a thumbs up, and if you're not subscribed to the channel, please hit that subscribe button, leave a comment in the comment section. Okay, so see you next time in another educative video.